Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at why there seems to be something funny going on with the amount of Bitcoins being bought in the ETFs and the current price action of Bitcoin. I'll also be having a look at the wider markets to see exactly where Bitcoin fits in with what's going on with the dollar and the other wider markets. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. I'm going to try and make this a shorter video if I can, so I'm going to start off with the story of the day. As per the title of this video, is there something funny going on with the Bitcoin price with regards to the amount of Bitcoins being bought up by the ETFs? Certainly something's going on, and what we've got here is a story that outlines this particular issue, and that is that the Bitcoin ETFs have sucked up 2 months of the Bitcoin mining supply in the first week of June. So that's 8 weeks of supply has been bought up in the first week of June. And if we scroll down here, we can have a look at a bit more detail. So what we've had so far in the first week of June is 25,729 Bitcoins, worth about $1.8 billion, which is around 8 times the 3,150 new Bitcoin mined over the same period. And I just want to highlight this particular chart. So what we've got here is 25,000 Bitcoins in the last week. So because of the halving, having gone down from 900 per day to 450 per day. So this is the equivalent of 51,400. And we can see on the left-hand side, we've never really got that amount since the ETFs began in January here. But as you can see, as the bars go up, in terms of the number of Bitcoins being bought by the ETFs, we can see how this is reflected in the price in the past over here, compared to what's happened in the last week. So what we've got here is the daily chart for Bitcoin, and this is where the ETF started. After the initial fall down here, because of the grayscale bleeding that went on right from the immediate approval time, what we've got from down here is a big solid move all the way up to the all-time highs at 73,000. So that chart was reflecting what's happened with the Bitcoin price in the past here. But over the last week, it doesn't seem to have reflected very much over here. Yes, we've had a little bit of an increase up to the all-time high, but it's nothing compared to what you would have expected with that amount of buying after the halving. So whether there's something funny going on, whether there's manipulation, as most people suspect, certainly the way these ETFs are buying up the Bitcoin and maybe not showing up somehow, whatever they're doing, is something that we all need to be just aware of. And we all know there are shenanigans going on all the time within the crypto space. And of course, we had the jobs data on Friday, which didn't really help, because what we got was a better than expected US job data and a slight reduction in the Bitcoin supply held by its largest holders. So this may well partly contribute to the price of Bitcoin not being where we expect it to be. So we just have to wait and see what happens and how it develops. But certainly these are things that we need to be aware of. If we move on to the liquidation heat map, we can see with Bitcoin that we've got 3 particular zones here. One is between 70 and 71,000, so it's around about 70,500. So we have a very good opportunity for it to come back up and take out these shorts here. But there are 2 zones down here around the 69,000, more around the 68.7 and about 69.2 here. So we'll see how this plays out, but certainly this gives us some sort of a ballpark figure of the range Bitcoin may well get up to in the next 24 to 48 hours. And we can see with the Bitcoin tracker, the number of Bitcoins held by these ETFs. As we've seen with that report, a lot of Bitcoins are being bought up by these ETFs, especially BlackRock. You can see they're powering ahead with 305,000 Bitcoins. And they've taken over Grayscale by quite a bit now, while Grayscale has gone down from 620,000 to 284,000. BlackRock has gone up to 305,000, and Fidelity is certainly coming up on the side and catching up to the Grayscale with its current stack of 173,000. So you can see these ETFs are really powering ahead, and we should be expecting the price of Bitcoin to be much higher. And this is reflected in the ETF overview here. So we've got the number 1 ETF, BlackRock, buying up 13,413, while Grayscale, which has been letting go of many of its Bitcoins now, has gone down by 1,851. So these figures used to be reversed at the beginning of the approval, back in January. Now it's being completely the other way around. So we need to be aware that the amount of bleeding from grayscale is becoming more of a trickle compared to what's happening with the other Bitcoin ETFs. And Fidelity, as we've seen with the figures, they're really powering ahead. They've bought up another 9,700 over the last 7 days. And even ARK are now starting to move in the right direction with 829. So you can see quite clearly more and more Bitcoins are being bought up by the ETFs, and yet it's not being reflected in the price. And maybe it's only a matter of time before it is. I would certainly hope so. And if we have a look at the total hash rate, what we've got is the hash rate falling, which allows the Bitcoin miners to be able to mine more Bitcoin at a lower electricity cost. And we can see with the Bitcoin mining fees per day, that's crept up to 5 million, but in between they did go up to about 24 million. And this was reflected with the Bitcoin miners. If we have a look at the Mara pool, which is the mining pool for Marathon Digital Holdings, if we scroll down here, we can see that the blip up for the Bitcoin mining fees allowed these miners to start increasing their Bitcoins from the normal, the 3.125 for each reward. We can see that in between we've got some very nice healthy figures here. So that's what's happening in the background, and we want to have a look at what's happening with the wider markets. And if we move on to dollar, we can see quite clearly why on Friday we got a big blip up for the dollar with the USA jobs data. So we got this blip up here, which we weren't expecting, but it was at the support line here. So we did go below the support line, and without the jobs data, we would have probably got rejected there on the way down. But if we look at the weekly chart, as per the evening star here, this was actually playing out all the way down to the support levels. And what we've got so far, if we zoom out, is that we're creating the lower highs along the way. So I wouldn't expect this to go above this level here at 107. To me, this looks like a dead cat bounce as it starts to come back down over the next few months. But of course, we've got the FOMC meeting to decide on the interest rates coming up on Wednesday. So that will have a big bearing on where the dollar goes, as well as the effect it's going to have on the other markets, including Bitcoin. And if we move on to the SPX, we can see quite clearly that we had a gravestone doji candle here. So this was based on the jobs data that we got on Friday, and it's caused a loss of momentum to the upside. And what we had here was a right translated cycle with further to go to the upside. And you can see quite clearly what happens with the macroeconomic picture that can stall any rally that we've got coming here. So we may well have now topped out on the SPX and come back to retest these levels down here at 5,200. But if we look at the weekly chart, we can see that the previous week we had this hammer candle here with a long wick at the bottom telling us that the momentum is shifting to the upside. And this is where our narrative came for the right translated cycle to be very much on. And we've got that, but the jobs data has put a spanner in the works a little bit. So certainly what happens on the Wednesday's meeting with the FOMC, that will determine the direction which way the SPX wants to go. So if we put on the 8 EMA, this blue line, we can see that it's very relevant to the SPX chart, and currently we're finding very strong support on that line. So we shouldn't really break below this 5,200. So how does that all feed into the Bitcoin price? Well, we can see quite clearly that since Friday's jobs data, what we've got is a bearish pressure bearing down on the Bitcoin price. And this may explain why we got rejected here at the 71,000. And what we've got currently is an evening star pattern developing on the Bitcoin price on the daily time frame. And this has a bearing to the downside. So it may well be for the next few days we go sideways, but it is a continuation pattern which should break down to the next support level here at around about 67, and that would tally in with the liquidation heat map going down to about 68. So anywhere around 67 we should find support on this line here. I'm not really expecting this to fall below this level at 67, but certainly if we did consolidate as we have been here, then this is a level that we could expect it to come back down to if it wanted to do that, around about the 60,000. So 60,000 is a level where if the things go wrong on Wednesday or any other bad data come along, we could see further decline in the Bitcoin price from here. But in the longer term, this would be a very healthy sign, because what we've got so far with the Bitcoin price is a price correction from the high here at 73,800, which was a 23% fall. But so far, since then, what we've also now got is a time correction. So we've had 3 months of time correction in this consolidation move, which was a move from the upside here. So this would be a continuation pattern. And when it breaks, the longer the time consolidation, the longer the time correction here, the bigger the momentum move that we should get on this side. So this is what I'm expecting. So in the short term, it may be a little bit more managing of our emotions, not to get too disheartened that this isn't going up now. But certainly if you zoom out and you look at the bigger picture, which I'm going to do now for you in order to help you to manage the emotions where I see a lot of people moving out of the space. When you zoom out, you see a completely different picture. And I want to bring you back to the default chart that we've got here, because if you look at the cycles, what is developing here is incredibly bullish and completely out of sync with the previous cycles. So just by zooming out, what you see is a completely different picture on the longer term time frame to what is being seen on the shorter term picture with the 60-day cycle. So quite clearly here at the previous all-time high, you can see there's no consolidation here. And we just barged through. In the second cycle, similar picture, no consolidation at the previous all-time high, and we just punched through. And in the last cycle, exactly the same, we punched through the previous all-time high. But this time around, we had so far 4 months of consolidation here. And if we were to have another 1 or 2 months of consolidation, then this follow-through of the price would supercharge a big move to the upside. That's what I would be hoping and expecting. If we can have a little bit more consolidation here, that would prove to be completely different to the previous cycles. So only time will tell, but certainly this is one way of managing people's emotions, that when things look rough in the short term, always zoom out and have a look at the bigger overall picture, and you can manage your emotions in a much more easier manner. So the current malaise of the consolidation going on, it seems to be grinding a lot of people out. But always see it as a big positive, because what we're really interested in is the end picture here, the end price. And if the end price is going to be much more greater by having a consolidation down here, then so be it. And if the consolidation is meaning that many people are going to leave the space, well, then there will be a bigger treasure over here for the rest of us who are going to stay the course. So there you have it. We've got the bigger picture with the Bitcoin price and the wider markets and what's going on in the news. Finally, I just want to mention something that keeps cropping up on the comments, and that is some confusion with the ratio trades that we do with the Bitcoin miners. So I just want to clarify a few things. So one of the comments here, Alpha One Official, said that, how will I receive my profits? Should I make some with the ratio trading? So I just want to clear up something. When you're buying in the ratio trades or swing trades or doing the investments with the Bitcoin miners, you don't do that with me. You do that on these exchanges, whichever exchange you want to use. And there's plenty of them here. This is a list by the current members. So they're trading on these exchanges. So with the ratio trades or swing trades, I just leave a message and show you exactly what I'm doing. Whether you want to follow that or not, that's up to you. It's your decision. So whenever there is a ratio trade, on my membership tab of my channel, I leave these messages, and all I'm doing is sharing my trades. Whether you want to take part in them, that's your business. It's your money, it's your choice, and it's your decision. So you can see 5 days ago here, we did a ratio trade between Marathon, which I sold at $20, and bought Cypher at $3.65. And the ratio there was 5.47. But on Friday, this market moved in our favor, as I was expecting, and we were able to buy back 50% of this. So as a result of that, I shared that in the update over here, where I moved back 50% of that trade when the ratio came back in our favor at our target of 4.66. And you can see with the ratios chart, this is the Marathon Cypher chart. Our trade was based on this candlestick pattern here, as well as the stochastic RSI losing momentum at the top here. So we got that follow through. We met our first target, but it was the second target where we took the 50% profit. And we're waiting for this target here at the 61.8 at around about 4.5, where I expect the price to move back up again, and we'll go back into Marathon to ride it up to the next level, which is this green box here. So this is how we play the ratio trade in the private Bitcoin miners section. And this is the trade here, and this is how you make your profits on the ratio trades. So on that day, I swapped Marathon, which was 2,258 units. We sold them at $20 at 45,160, and we bought up 12,372 Cypher units. And that was the ratio trade at that time at 5.47. And then on Friday, I had a 50% swap because I'm expecting the ratio to go further down. So we collect a little bit more profit at a lower level. So if you look at just the 50% here, how many units you've made, we swapped half of the Cypher i.e. 6,186 units at these prices and bought back 1,316 of the Marathon shares. And if that would have been 100% trade, then we would have got 2,632 units of Marathon. And the difference between that and where we started with the ratio trade here, so that would be 2,632 minus 2258, that gives you a profit of 374 extra units, which at the current price of Marathon at $19 gives you a profit of just over $7,000. And the beauty about this is that the more you do the ratio trades and the more units you accumulate, then with the leverage play that we're expecting of between 5 and 10 in the next phase of the bull market, you can multiply that by that number. So if we got a 5x from where we are to the end of the bull market, that extra number of units which you keep on your exchange wherever you're trading, or if you wanted to sell and take the profit, then you can obviously take that profit and pocket the money. That's all yours. It has nothing to do with me or the channel. The profit is all yours. So just to clear, you're not investing with me, you're investing on the exchange, which is where you have all total control. But if that was to increase by 5 times, let's say, over the next 6 to 12 months, that one trade would give you $35,000. So this is the beauty about these ratio trades, which I explained in the last video. And for those of you who are interested in following our portfolio, as well as the ratio trades, etc., you can do that by clicking the join button below any of my videos. And if you're on a handheld device, you may not see this join button. So if you go into the description box down here, you can click this button here, and for less than the price of a Snickers bar a day, or a coffee per week, but certainly better than a kick up the backside, at £12.99 you would have access to market updates at the end of every trading session, Monday to Friday, and you have 2 videos a week on Wednesday and Friday, and we're following these portfolios until the end of the bull market, which has gone from 100,000 to 531,000 since the beginning of 2023, with an end of the bull market target of $5 million. So if you're interested in all of that, then join our growing group of private members with the Bitcoin miners. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.